this week's first edition of Targets in Focus, I'm joined by Sebastien Galy, a London-based Senior FX Strategist at Societe Generale. Sebastien, considering the ongoing economic and political turmoil surrounding the European debt crisis, where do you see the pair euro-dollar trading out in the short, mid and long term?
So the short term is slightly more difficult. If you look at the underlying fundamentals, for example, with a poor bond auction in Germany, things are clearly getting a lot worse. So just on that basis, logic would normally dictate that euro-dollar continues to head lower in the direction of 131 or so. The issue, of course, is really one of how long and how far people are able to hold their positions. In the longer term, we do expect eventually that somehow that the ECB will have to start printing money, and they will have to monetize a little bit some of that debt to reduce the pressure. Irrespective of this, whether they do it or not, the potential for the Eurozone is increasingly somewhat bleak, and that tends to suggest that euro-dollar should remain a relatively weak currency until the point where they actually do monetize it. So when we move to that point where they do monetize it, I think the overall effect will be to leave you with maybe, let's say, 6 months down the road with yields in Italy at 7%, which is basically a zero risk type of risk at the end of the day when the ECB starts to become active, and that will create very, very large scale flows going into these markets. And nonetheless, that should end up basically helping the euro-dollar to recover quite nicely. So the odds are right now in the short term maybe some moves in direction to 131, and if we break a 130, then probably at that point in time we'll be in such a situation that the ECB will be eventually forced to move, and that suggests that the euro-dollar will then nicely rebound from these levels.
What about the Japanese yen? The yen strength is still unsettling many Japanese companies, but what are your forecasts looking like for the dollar-yen by year's end and into next year? And out of curiosity, at what level do you think the yen will have to reach before the Bank of Japan may intervene again?
The dollar-yen is getting close to levels where the BOJ could consider intervening. The problem is that most retail investors in Japan get excited about this possibility and have pushed the dollar-yen higher, building significant positions long in dollar-yen, particularly also in Aussie-yen. They are taking very risky positions at this point in time, which of course leads to the risk that they are disappointed and they get a significant washout. Now, where do we should look for in terms of a potential intervention for dollar-yen? It's not necessarily the level of dollar-yen which matters. It's a performance of the Nikkei, so we should be in negative prints on that side, and we should also see some acceleration downward in dollar-yen, but mostly the move of the yen relative to the renminbi. The renminbi also moves relative to the broad dollar story and is a far better benchmark when you compare yourselves relative to Asia, and we have seen a tendency for the BOJ to intervene when we break below the 12 level. We are not there yet, which again suggests that we are not really at the point of intervention, though many people are excited by this prospect. And so maybe it's going to take another week or two, depending on the circumstances within Europe, for that to happen. In the case of a longer-term outlook, we do think that the yen is stronger for longer, just on the basis that Japan is somewhat asset-rich. Secondly, it continues to export, so it continues to build up basically its long asset positions, and overall it tends to also attract some interest by foreigners to buy into the JGB market. The outcome is to push dollar-yen steadily but slowly.
Finally, Sebastien, what are your views at Societe Generale about the pound dollar? Right now, how do you see the cable performing over the next year?
Sterling is actually an exciting currency. Everybody absolutely hates it. It's universally unloved for many good reasons. But the problem is, after a few years, you kind of think that it's been priced in, and which is exactly what's been happening to Sterling. Sterling has been performing actually relatively well if you look at this correct benchmark, which is not the dollar but the euro. It has a tendency to outperform. Actually, we do expect in 1, 2, 3 years horizon that the sterling will be one of the best performers in the European space, and particularly so relative to the Swiss franc. So we're quite excited about the long-term positions, long sterling, short CHF. If you want to argue on the basis of valuation, it is the most stretched positions relative to valuation, and I think it should perform well in the very long term. Otherwise, in the short term, sterling tends to trade in line with euro-dollar with some downside in euro-sterling.
Thank you very much, Sebastien. It was great to speak to you again. There'll be another edition of Targets in Focus tomorrow, so make sure you all stay tuned. Goodbye for now.